Hey everyone, this is Dan Habib with CryptoCharged. I want to welcome you to this special edition YouTube Live here webinar where we are going to giving you an introduction to leverage. So, because this is a public stream here, I want to just first take a second to say hello to everybody. Some of you may be members at CryptoCharged. Some of you, this may be the first time that you're seeing us. So, at first, just want to let you know that CryptoCharged is an educational platform that myself and my two partners, Matt and Brian, have put together, and we have Gavin helping us on the stream here. And this is a platform that really helps you to be educated in the space. It can be something that can be confusing. There's a lot of news out there, there's a lot of volatility, and we really break down for you 5 days a week on live streams what's happening in the market. What's the macro news out there? We break down technical analysis. We also look at the on-chain analysis and take a look at some investor behaviors and sentiment. And we also have an extensive educational library. So many of the things I'm going to go over with you today, you can find pieces and segments of it within the library as far as how do you even get started? How do you open up an account? What kind of trading should you be doing? How can you learn technicals on your own? And one of the things we do that people really like is we go over different hot coin projects out there that we like. We like the utility. We think they have a good team behind them, think they have a good future, and we bring those to you. And none of this, before we get started, is financial advice. This is really education. But we also point out some ideal levels that you could get into certain coins, or maybe you want to exit and take profits. Remember, it's always important to take profits when you have them. If you're asking the question, hey, is it now a good time to take profit? Well, it might be a good time to start getting out of that position and realizing some profit. After all, the reason why all of us are in this game is to make money. So today's topic is an introduction to leverage. So a couple of things that I want to go over on the stream with you today is really breaking down the KuCoin platform. So how do we go ahead and fund this? And then how can we use leverage, number one, if we want to do some risky trades and we want to try to take advantage of some of the massive volatility that we see in the crypto markets, but it can also be used to hedge your positions or to really trade in a way that is safe, where maybe you have a couple Bitcoin in your Coinbase Pro account and we see price going down and you don't want to sell those positions. However, you want to hedge yourself so you're not losing that money and you're making money on the way downwards. So you can actually short positions and make money when the price of Bitcoin goes down. We're also going to be going through some technical analysis, and I'm going to show you how what I like to do to try to exploit some of this volatility is really kind of see if we can identify a range and then go ahead and open both long and short positions to try to make some money and to see if we can find a well-defined range that we might be able to exploit. Now, at the end of the stream, what I'm hoping for is that we're going to get an opportunity, some trading that we can see where maybe I want to go ahead and enter into a short or a long position with you guys, watch price, show you how this works in real time, and hopefully make some money. Now, again, this is not financial advice. Any of you out there that want to try to follow along with me, this is certainly at your own risk. This can certainly be extremely volatile and risky. But let's go ahead and jump right into it. Now, Gavin, if you could pull up my screen, this is what the KuCoin futures interface looks like. But before we get to this, one of the things we have to do is we have to fund your KuCoin account. Now, some of you may not have a KuCoin account. If you go to CryptoCharged.com, if you sign up either for a 2-week trial or you're already a member, we have some videos there that explain to you how you can go ahead and get your account created. But most of you, I would recommend on your regular account are using something like Coinbase, or I would say Coinbase Pro, because Coinbase Pro is something that's going to give you the least amount of fees and also access to the most amount of coins out there as opposed to Coinbase. Now, of course, there's going to be other coins that you're not going to be able to purchase. And one of the great tools or one of the great exchanges that you can use to buy other coins that are not on Coinbase Pro is KuCoin. You have access to a ton of the different altcoins out there. So when I go to my KuCoin account and I log in, I can click on my assets and it'll give me a look at my assets overview, right? So it'll show me what coins I have in my trading account and my futures account. So the first thing that I want to do is I want to fund this account. Now, when we talk about KuCoin, it's not like Coinbase Pro where I can just go ahead and link my bank account and deposit money into it. I have to transfer the coins in there. So what I want to do is I want to go to my trading account and I want to deposit coins into this account so I can then go ahead and do some leverage trading. So if you hit the deposit button, it's going to say, what coin do you want to go ahead and transfer? Now, it's very important that you choose the right coin. If I were to go ahead and enter in XLM as a coin that I want to go ahead and deposit, but from my Coinbase Pro account, I'm actually sending a different coin, guess what? You could lose those coins forever. So this is something you want to be extremely careful about. So let's say I want to transfer XLM. And the reason why I'm doing this is because, listen, I could transfer any coins into it, but XLM happens to be a coin that it goes at a very low fee and in a very quick amount of time. So this is my deposit address for XLM or Stellar. So I can go ahead and copy this address, and then I can go into my Coinbase Pro account, and then I can pull up XLM right here. So I'm going to pull up XLM USD. And then you can see here, it'll show me the XLM that I currently own, and then it'll also show me my cash position. So I have $500 of cash here. So I want to go through this exercise to show you how you can do this. So because I'm only buying a small amount here, I'm going to go ahead and just place a market order and buy $500 worth of XLM. It's about 2,600 XLM as far as the amount of coins. So let's go ahead and place that buy order. Boom, you can see that it was filled. So now what I want to do is I want to withdraw this money into my KuCoin account. So I'll go to XLM and I will send it to a crypto address. And then once I do so, I can enter in my XLM address that I copy and paste, and I'm going to paste here from my KuCoin. So once again, you want to make sure you're doing this correctly. But when you're in your KuCoin, this is your receiving address for XLM or for Stellar Lumens. So again, you want to copy this and make sure you're copying the correct one in the account that you want. And then I can go ahead and I can enter this address in here. I can use the address and it'll tell me, okay, this is a valid XLM address. This is a little bit of like a checkpoint for you to make sure that you're sending it to indeed an XLM wallet as opposed to something else where you can get your coins lost. And then you can go ahead and I can go ahead and do this and I can see that I can go ahead and withdraw this money into that account. Now, once I go ahead and do that, I can come back to my KuCoin and I can go back to my assets. Now, once you're in this KuCoin address here in your assets, you'll have to wait for this to come across and we'll get a notification once it does. However, it's going to deposit it right into my trading account. So from here, I can go ahead and I can pull up the XLM that I just transferred over and I can go ahead and sell that. Now, what I want to sell it into is USDT, which is a stable coin, because that is the coin that I am going to be using when I'm doing my leverage trading. And then once I do that, I can transfer this from the trading account into my futures account. So I'll click on my trading account, I'll transfer it to my futures account, and I will choose USDT, and it will show me my balance that I have there that I can then go ahead and send into the futures account. Once that's done, you will then see that the futures account is funded with USDT. And it looks like I have about $24,000 worth here. So I can then click on this and I can click trade. Now, once I do this, it's going to pull me into the interface for the futures account. Now, there's a lot going on here. So we want to take this slow and we want to take this step by step. But the first thing I want to explain to you is why are we using a stable coin? Why are we using USDT? Well, the thing is that you can use Bitcoin or you can use a cryptocurrency, but I prefer to use a stable coin because we're already going to be getting risky here or having a lot of volatility in this type of trade. Whereas if you're using cryptocurrencies as your margin, well, you can see an enhanced amount of volatility. And I'll show you what I mean by that as we go along a little bit further. But essentially what we're doing here when we're using leverage and we're going long or short is we're borrowing money. And we're borrowing money against either our stable coins or against a cryptocurrency. So let's use an example. If I was going long Bitcoin and I was using Bitcoin as my margin and I was essentially borrowing money against my Bitcoin, well, guess what happens? If the price of Bitcoin goes down, not only am I losing money on my long position, my margin or the money that I'm using and I'm borrowing against is also going down. So I can get liquidated at a much faster rate if I am using crypto as margin as opposed to a stable coin like USDT, which is not going to have any volatility. It's pegged to the dollar pretty much 1-to-1. So always use, in my opinion, a stable coin when you're doing these leverage type positions to reduce the volatility, at least from your margin standpoint. So let's go ahead and take a look at this. And I think it's important to realize that you can use leverage to, number one, go ahead and bet on the market. And you can say, I want to bet it's going to go higher or bet it's going to go lower. But you can also use it to trade in a safe manner. And here's what I mean by that. You can use it to hedge your positions. So if I had one Bitcoin in my Coinbase Pro account, and let's say I was sitting at a profit there, and I didn't want to sell that Bitcoin, maybe I wanted to wait a year so I get long-term capital gains, or I just didn't want to exit the position for whatever reason. But we're in a clear downtrend in the market now, and I wanted to profit from the downturn, or really what I want to do is hedge my Bitcoin long position that I have in Coinbase Pro. Well, what you could do is you can short one Bitcoin on something like KuCoin. But because you're using leverage, I don't have to go ahead and short it for the whole Bitcoin and pay for the whole Bitcoin. Meaning right now, the price of Bitcoin on this exchange is about $34,850. I don't have to have $35,000 in this account to short one Bitcoin. What I can do is I can borrow money and I can use leverage. However, when you're using leverage, you're taking on risk. When you're using leverage, you are borrowing money from the exchange. And what that means is that, number one, they're not necessarily going to give you that money for free. But number two, you're going to have a level where you will have a liquidation point, which means that this exchange isn't just going to let me borrow the money no matter what happens to price. If I'm betting that Bitcoin is going to go higher and it keeps going lower and lower and lower, there's going to be a certain level where I'm going to lose all my money. And the amount of leverage that you use, it's important to know that the higher the leverage, the smaller that gap is until you can get liquidated. So these are all things that we want to keep in mind. Now, when we go ahead and we look at the exchange, this again is the futures interface. Now, for many of you that this is brand new to, this is something that can certainly be very confusing. So we want to go step by step and make sure that, number one, if you're going to start doing this, you start small. So you really limit the amount that you can be losing or risking just in case you make any errors. But number two, you want to make sure you're using the correct contract. So when we look up here, this is going to let me do a drop down and choose, number one, what do I want to use? Do I want to use coins as my trading instrument against the Bitcoin futures contract? Do I want to use USDT? Do I want to use USDC? Do I want to use Bitcoin? So for me, as you saw, I have all the money in this account in USDT. So I'm going to choose the BTC Bitcoin Perpetual Futures Contract. So that is what it is called here on this exchange. Now, we've heard those of you that are members of CryptoCharged talk about how you have the spot market and you have the derivatives or the futures markets. This is the futures market. So we are not actually buying Bitcoin or buying the spot of Bitcoin. What we're doing is we are buying something that is basically trying to mimic the price of Bitcoin. And it's a futures contract. And the reason why it's called perpetual is because it doesn't have an expiration. It just continues to roll, meaning on a normal futures contract, there's going to be an expiration date. That doesn't happen with these. These are continuing contracts and they're called perpetual. So now we have the right one pulled up here. We have BTC Perpetual and it's in USDT because that is the stable coin that we're going to use. And if you have the right one pulled up and you have the right coins in there, you will see your balance here on the bottom right. So my assets, my total assets in USDT on this account that I have for this example is about 25,000 USDT. So now as we continue along, and you can see it gives you some shortcuts up top here for other coins that you may have traded in the past. And remember, you can switch this if you wanted to do Ethereum or any other contract, you can see it here. Now, the next thing you'll see is it shows you what the price is of this perpetual contract. Now, it's important to note that the price of the BTC Bitcoin Perpetual contract, it tries to mimic the price of Bitcoin on the spot exchanges. So it tries to mimic the price of Bitcoin, let's say, on Coinbase Pro. However, it's not always going to be the same. If you actually look right now on Coinbase, the actual price of Bitcoin is $34,950. On here, it's $34,919. So you see that there's about a $30 to $40 difference. This is something that's important to keep in mind because, hey, if I'm looking at charts on the wrong exchange, the levels aren't going to line up exactly. So this is something that we want to remember. Now, when you also see here, you'll see that it shows you what the index price is. It'll show you what the volume is in this futures contract. And it looks like it's about 38,000 Bitcoin that people are either going long or short in the last 24 hours. And it shows you what the open interest is. So it looks like about 7,000 Bitcoin on this exchange is either long or short as far as the open interest. Now, this is something that is very important to keep in mind. and it's called the funding rate. So what this is it's essentially the mechanism that KuCoin has built into their exchange to try to keep the price of this contract as close as possible to the spot price of Bitcoin, to the price of Bitcoin, let's say on Coinbase Pro. So what does this do and how does this instrument work? Well, essentially, like anything out there, if you have a ton of demand to, let's say, go long Bitcoin, what does all that demand do? It drives the price up. So if there's so much interest going long in Bitcoin, the price of this contract will move higher in relation to the spot price of Bitcoin. Well, this thing is meant to try to track the price of Bitcoin. So what does the funding rate do? If the funding rate is positive, that means that the people that go long or bet that Bitcoin's going to go higher in this exchange, they have to pay the people that are going short. Now, right now, you'll notice that the funding is negative. So what does that mean? That means that there's more interest out there right now for people to go short, for people to bet that the price of Bitcoin is going to move lower. And because of that, what do you see happening? You see the actual price of the contract on this exchange is lower than the actual price or the spot price of Bitcoin. So this mechanism, what it's doing is saying, okay, you know what we want to do? We want to try to get this price, which is lagging Bitcoin. It's lower than the price of Bitcoin in the spot market. We want to try to get the price of this closer to it, and we want to get it to move higher. How do they do that? The funding rate goes negative, which means you are incented right now to open a long position. So that means that if you open a short position, you actually have to pay the people going long. So right now, if I opened up a long position, instead of having to pay to have that position open, I would actually get paid by the shorts. Now, the purpose of this, well, if I'm going to get paid to go long, there's an incentive there, and that will cause more people to go ahead and open long contracts, and it will get the price of this perpetual contract closer to the spot price. So that is really the purpose of this. But listen, maybe your conviction is that the price is going to go lower and you don't care that the funding is negative, right? You don't use this to determine your decision, but it's just something that you have to keep in mind because you will have to pay if you are going short right now. And if you're going long, you will actually receive money. Now, this is a very kind of marginal, and I guess that's the wrong word to use here. It's a small fee. So this is not going to be something that is really huge, but sometimes you can see this funding rate at 0.1 or negative 0.1. When you see that happen, that means there's a really big imbalance in longs and shorts, and they really want to entice people to go the other way. But also, if you're spending a few $1,000s, that could be a few $100s in a fee. So this is something that you want to keep an eye on. Now, the other thing is this. There's something called a funding settlement. So what this is it's a 7-hour time period. And you can see in the 7-hour time period, there's about 35 minutes left. In 35 minutes, this will be charged to the people that are going short, and the people going long will receive that money. So every 7 hours, you have a new funding settlement where either the longs pay the shorts or the shorts pay the longs, depending on what the funding rate is. So to recap this again, if the funding is negative, that means that if you are opening a short position, you actually have to pay the people going long. If the funding is positive, there's too much interest in people going long and betting Bitcoin's going to go up. Where if you're opening up a long position, you actually have to pay the shorts. And if you open up a short position, you're incented to do so because you receive money. And every 7 hours, this goes and resets where it will go ahead and charge that fee again to either the longs or the shorts. Now, if we wanted to, let's say, go short, and I was doing a large trade, I might not want to go ahead and do the trade with 33 minutes left in the funding settlement unless I see some price action that I really want to exploit. Why? Because I'm going to get charged a 0.009% funding rate if I'm going short. And then again in 33 minutes, I'm going to be charged again. So this is something that, hey, unless I have a lot of conviction right now, also depends on the amount you're trading, I might want to wait 33 minutes to go ahead and enter in a short position so I don't get charged twice really quickly from the funding fee. Makes sense, team? I hope that it does. And Gavin, this might be a good kind of chance here to pause just to see if anybody has any questions on some of the things that we had covered here. But hey, good afternoon, Brian, and good afternoon, Kevin, and some of the other individuals here. Matty Schultz, great to see you, brother. So guys, If we don't have any questions, we will continue. But I want to just go ahead and also show you some other things here that we have. So you also have the order book here. So this is going to show you the limit orders out here on this exchange, literally in the order book. So you can see what orders are out there for people that are going to go short or people that are going to go long. And you can see what those prices look like. So you could see when we're looking here, it looks like there's, well, it just got filled, but there was about 22 buy orders here of Bitcoin at around 35,089. So these are things that you can watch and you can see, is there a lot of orders either below or above where the current price is? So you can see where the demand is and you can see where it's likely that price may go to based on liquidity in the markets. Now, this is the chart here for the Bitcoin Perpetual contract. And this is something that is an integration with TradingView. But the one thing that's important to note is that, remember, this is the Bitcoin Perpetual contract. This is not the Bitcoin spot chart. So if I were to go to my TradingView, I can't actually pull up the chart of the KuCoin Bitcoin Perpetual contract. The closest thing I could pull up to it would actually be BTC in USDT terms on the KuCoin exchange. But it's still different than the Perpetual contract. So take a look. The price of this is 35,074. If we go back here, the price of this is 35,063. So as you see, the price of this is actually lower than the spot price of Bitcoin in USDT terms. So that's why the funding rate is negative. And they're trying to entice people to go long, to bring more demand for people going long, to bring this closer to parity with the actual price of Bitcoin in the spot markets. Now, the other thing is this is where you are going to be placing your orders. So you can do your limit orders, you can do your stop orders. And before we even get to that, you'll notice here you have a calculator. So this allows you to, without placing the trade, go ahead and say, okay, let's say that I were to go ahead and use 10 times leverage. And let's say my entry point is going to be the last price. And let's say I went and placed the order there and my closing price, let's say hypothetically we were going to hold this thing and we thought it was going to rebound up to $36,000. And the size we wanted to do was like 3 Bitcoin worth. You can start the calculation and you could see what it would cost you, what the profit would be if it in fact went up to that close price of $36,000 and what your return on investment is. And you can actually go ahead and place the order right from here as well after you do this in a calculator. You can also do this on the other end of things. You can do this short. So if we think the price is going to continue to go lower, let's say we wanted to hold this till 34,500 and we wanted to, again, use 3 Bitcoin as a size. Well, guess what? I'd make about $1,800. I'd make 17% on my investment, but it would cost me about $10,000 in USDT. Now, the other thing is this. The more leverage you use, the more exposure you're going to get. So here's what I mean. If I use 25 times leverage, then guess what? The cost, and if I start the calculation, is only $4,200 as opposed to it being over $10,000. So I'm using more leverage, which means that I am borrowing more. I still have the same profit, but look at the return on the investment. It's about 42% because I'm only risking $4,200 and I'm making almost $1,800. But when you do this, when you use more leverage, it gives you more exposure out there. The 3 Bitcoin doesn't cost the same amount because I am borrowing 25 times that amount of money. But there's a risk with this. There is a cost per se, meaning my liquidation point is going to be much quicker than if I were to use less leverage. Now, an example of how you would use this if you wanted to just do this in a safe manner would be this. Let's say I own 1 Bitcoin on my Coinbase Pro account. And we see the price has been in this downtrend. And you said, you know what, I don't want to sell that Bitcoin, but I want to see if I can either make some money to the downside or I want to hedge that position where any losses in that will be negated because if the price goes down, I'm going to make money. Well, if I had 1 Bitcoin, and let's just say the entry price is the last price, let's just say that, we'll just put a lower number in here. If I just did 1-to-1, meaning if I didn't use any leverage and I wanted to use 1 Bitcoin, guess what? It's going to cost me the price of 1 Bitcoin, $35,082. But if I wanted to do, let's say, 10 times leverage, this is not like an insane amount of leverage. you could see that you can go all the way up to 100 times leverage, where you get a smallest move and you could be liquidated. But if I did 10 times leverage, well, now I am completely hedging my long position in Bitcoin, and it's costing me $3,500. So if the price of Bitcoin were to go up, well, guess what? I would lose money on this trade. If the price of Bitcoin were to go down, I would lose money on my Coinbase Pro account for the one Bitcoin, but I would make back that same amount in this futures account. So this is ways that you can hedge yourself and borrow money, and you can protect yourself. Now, again, the lower the amount of margin, the more money you're going to have to spend, and the safer it is. The higher the amount of margin, the riskier the trade is, but the less you have to actually invest in order to go ahead and match that amount that you have in your Coinbase Pro account. So these are all things that you want to tread slowly, tread carefully. This is something that if I were you and I was first starting out on the KuCoin account, I would be using a very small amount of money, and I would be using a very small amount of leverage, because remember, you don't want to make any errors with any sizable amount of money. And the first few times you do this, you're probably going to lose some money, because this is going to be a learning experience. But this is something that once you get the hang of it, once you practice it, you can either use it to hedge your positions, or you can use it after you find a well-defined trading range to make additional money. You know, something that Gavin and I and Matt and I were sitting on just 2 days ago. We were watching price, and we saw price going down, and we were able to make a sizable amount of money taking advantage of the moves to the downside in the market. But you want to make sure that when you're doing this, you are going and using stop losses, using take profits. I would say the biggest thing that I would explain to you is that when you're doing leverage trading, the profits can happen fast, but so can the losses. But they don't stay there forever. Especially when you're using higher amounts of leverage, the smallest movements, you see price go, $100 to the upside, and you have exposure to 3 Bitcoin. Well, guess what? You're making or losing $300. And we all know how fast a $100 move in the price of Bitcoin can happen. It can happen within seconds. So this is something that you want to always take your profit levels and your stop loss levels, and you want to enter those in there. Or if you're not, you want to make sure you're watching this thing like a hawk, because again, it can happen very quickly where you can lose money or make money. And I can't tell you from experience how many times I've been watching it, and all of a sudden I'm at $1,000 profit, but I'm like, you know what? It looks like there's some more room to the upside. Maybe we'll wait to see if we can get some additional gains. Maybe you get a little bit greedy. The next thing you know, the next candle, you see a sharp reversal to the lower side. And then not only is that $1,000 profit gone, now you're actually sitting at a loss. So the best advice when you're leverage trading in the riskier side of things, not hedging your position, would be to make sure you're taking the profits when you see them. If you see a $100 profit or a few $100 profit, I would recommend, unless we're seeing a clear explosion to the upside or a clear breakout, take the profits. If we're sitting at a loss and we're not comfortable with that, limit your losses. There will always be another trade. Remember that. There will always be another trade. Cash is a position. You don't always have to be in a trade, and the profits do not last long when you're seeing volatility, so make sure that you are taking them. The other thing is I think sometimes it makes a lot of sense to just kind of put things in perspective. If we just entered into a trade and we made $500 within 15 minutes, what do you make in your normal job on an hourly basis, right? Are you making $2,000 an hour? If not, then hey, that $500 within a 10-minute trade, it's looking pretty good, right? So put things in perspective. Now let's go ahead and jump into the exchange here once more. So when we want to go ahead and enter into a trade, you come in here and you can either click on the last price if you want to get into this trade right away. And what it's going to do is it's going to take the last price on this exchange and enter it in here. And then you can enter in what amount you want to get. So let's just say that I, looking at this chart, wanted to go short. It looks like we're in a downtrend. We hit off against this 5-day moving average here, and boom, it looks like we're getting rejected a little bit. If I wanted to go ahead and go short here, I would come in here, I would enter in the last price. I would say, okay, I want to go short 3 Bitcoin worth. Well, guess what? That is giving me access to $105,000 worth of Bitcoin, which is 3 Bitcoins at 27x margin. So that means that I am only going to be spending $4,000, but I'm actually getting exposure to 27 times that amount, which is where you get the 105,000, and that's going to give me 3 Bitcoin worth. But again, I'm only risking $4,000. But remember, it's extremely risky and there will be a liquidation point. Let's say I wanted to just do one Bitcoin and I wanted to maybe do a little bit of a less leverage. Let's say I wanted to do 10 times leverage. Well, guess what? The cost now is $3,500 to give me access to one Bitcoin because we are using 10 times leverage. So I get 10 times the $3,500, which is $35,000, and that's the cost of one Bitcoin. And then once I choose what I want to do, I can then choose to go long or short. But before getting to that, you'll notice here there is a TP/SL of a long position and the same thing for a short position. This is where before even executing the trade, and I recommend that you do this, especially when you're starting out, you can set your take profit and your stop loss. So let's say that we did want to, in fact, let's say we wanted to go short. Okay, so we would go to the take profit stop loss of a short. Well, I can either enter in what level I want to sell this at, or I can use a percentage. So if I wanted to make 25% profit on my trade, well, the take profit level would be at $34,208. So it would have to go down about $750 or so for me to make 25% on this trade. And then my stop loss, I could say, you know what, I'm comfortable with a 15% loss on this position. Well, that would mean that my stop loss would be at $35,585, which would be about $580 or so higher than the current price. And it will put the lines on this chart so you can see, hey, here's my take profit, here's my stop loss. But if you don't enter these in here, you need to be watching this closely because otherwise you're not going to be protected. You are not going to be in a position where it will automatically trigger an order to sell this, either when you're losing too much money or you've reached the level of profit that you're comfortable with. So when we look at the charts, one of the things that I always want to do is try to see if there is a well-defined trading range that we can exploit. So what I mean by that is that we don't want to just come in here and say, hey, you know what? Let's just go ahead and enter into a long position for the heck of it, or let's just go ahead and enter into a short position. Now, when we're looking at the recent price action here, what does it look like is happening? Well, it looks like we're in a downtrend. It looks like we came up and we got rejected from some moving averages. And I went ahead and I also put in what the daily open of the day was, which was right about here. And it looks like we're moving lower and we're getting rejected. Well, where is the next floor of support here? How much more room do we have to the downside? Well, you could see that there's not really many clear floors of support. You could say that, hey, some of the bottoms of these candles, it looks like we have some support, which it looks like we may be testing here shortly. But other than that, price could come down to here. Price could come down to where the low of this candle was. So what you want to do is you want to try to identify a well-defined trading range. And what I mean by that is this. If we were to just go back in time a little bit, one of the areas that looked like it was holding and was providing a good floor of support was this level right here. And it also looked like this 200-day moving average was providing resistance. So what would be a trading strategy here? Well, for the time being, if we could go back in time here, it certainly looked like this was a good floor of support, meaning when the price of Bitcoin came down to this level, it looked like we were getting some volume to come in and the price would rebound from here. And then on the other end of things, when we reached this 200-day moving average, it looks like this was a tough ceiling of resistance. Every time the price rebounded, it then hit this level or came close to it, and then we saw a sell-off. And then you see the same thing happen several times. Now, eventually, this is going to be invalidated, and you're going to see either a breakout to the upside or a breakout to the downside. So that's something that you want to be careful of. And you want to keep that in mind where, hey, I'm going to make sure I have my stop losses in and my take profits in, because we want to exploit the trading range for as long as it exists. It's not going to exist forever. So in this case, what I did when I was watching this is I would say, okay, it looks like we're testing this level here down here, and we're also getting rejected from this level. So whenever we see price come into this range, I'm going to place a long order, meaning I'm going to bet the price of Bitcoin is going to bounce higher from here. Whenever we get a little bit beneath this 200-day moving average, I'm going to first of all cancel my long order and take profit. And then I'm going to go ahead and put in a short position and then play it down. And then once we get down towards these similar levels, I'm going to close that short position and take profit. And then I'm going to open into a long position and play it back up towards this 200-day moving average and take the profits when I see them. Now, you could have done this several times as we are in this kind of well-defined range, but eventually what happens? Well, if we went long here, we would have made money up to here. I probably would have gotten out because this looks like to me a good range to take profit. And the last few times we saw this, what happened? We got rejected, but guess what? It broke out. Now, did we leave some money on the table here? Of course we did. But hey, you never go broke taking a profit. We don't want to get slaughtered. And guess what? Some people that held on to this and they said, you know what? We're breaking out. It looks like we have more room to go to the upside. They might have held this. And then what happened? This was a fake out. We saw a spike to the high, and then you just saw this thing fall off of a cliff in a very short period of time. And guess what? If you didn't get out and take profit, if you weren't setting to your trading principles and you didn't hold on and you held on, well, hopefully you would have had a stop loss set. So it would have automatically triggered a sell order on your position once you got down to some of these levels. But if you didn't, well, guess what? You lost all your profit and you most likely got liquidated and you lost everything. So when we go back to the amount that we are actually risking, in this case, it looks like we're risking $3,500. Well, that is the most that you can lose, but you can lose all of it when you get liquidated. And the higher your level of margin or leverage is, the faster that can occur. So let's go ahead and just pause here and see if we can answer some questions here. Gavin, any questions that you see here, please let me know before we go in and actually take a look at some of the ranges and see if there's some trading that we might want to exploit. All right. Well, if we don't have any questions, let's go ahead and jump in. Now, listen, based on what I'm seeing here on the charts, I want to show you what I would point out as a range. And I also want to show you that when we're doing this leverage trading, we are trying to exploit lower time frames. We want to take a look at the charts, but if I was looking at a day chart of Bitcoin, this isn't really going to tell me too much as far as what are good entry and exit points, or what are good levels that I might want to buy or sell from. Why? Because every one of these candles is one day. And as you guys know, you could see a ton of volatility within one day. So what do? We go down to a shorter time frame. Now, if you're drawing your own charts, which, by the way, I would recommend you draw the charts in here in KuCoin. The reason being, well, remember, we can't pull up on our TradingView the perpetual contract for USDT on KuCoin. The closest thing I can pull up would be the BTC USD regular coin price, not the perpetual contract. So it's not going to give me an exact. I can look here and say, okay, I like my TradingView. I have my indicators on here. I could try to identify some different levels, but I then want to come back to this chart and make sure that I'm trying my best to estimate where that is on this, because remember, the price can be different, and most of the time it is, and the levels will not line up exactly. So I can't just look on my TradingView and say, you know what? It looks like it's going to bounce off the 50-day moving average, which is at 34,000. Well, if I set an order in at that exact price, it's not going to be the same exact level. I may either miss the trade, or I may completely get, in at too high of a price or too low of a price. So you want to come here, and then what I like to do is I like to really get granular. So what I start out is an hour time frame candle. So what that means is this: every single one of these candles on this chart, it's not a day, it's an hour. So this is 1 hour, this is 1 hour, this is 1 hour, this is 1 hour. And then the moving averages that I already have, and I have some moving averages that I like to look at when I'm doing these trades. I like to look at the 5-day exponential. I like to look at the 13-day exponential, the 50-day, the 200. I even throw in the 800-day moving average in here. But this is not, let's just use one for an example. This yellow line here is the 5-day moving average. But remember, since we're looking at an hour candle, it's really like the 5-hour moving average. It's not taking the moving average for 5 days like it would be doing on a day chart. It's relative to the time frame you're looking at. Here's another example. Let's say we wanted to go to a shorter time frame than a 1 hour. We wanted to go to a 15-minute chart. Well, every one of these candles now, it's not an hour or it's not a day, it's 15 minutes. And all these moving averages that I have drawn, They're not showing me 15 days or 50 days or 25 days. It's showing me it in 15-minute candles. So this is something that you want to keep in mind. So when we're looking at this, what does this look like to me? Well, it looks like we're breaking down here. It looks like if we were to take a look at this, we're in a clear downtrend here. You could probably draw a trend line here and see that we've hit some of these tops. And it looks like we have some room to fall. It doesn't look like there's any kind of clear floor of support. Now, is this somewhere where I would go ahead and probably jump in right now? I probably wouldn't, just because it's a little bit undefined. But if I were to say, hey, which way do I think this might go? It might have some more room to the downside. So I'm going to jump into a trade here with you guys at a small amount, just for the purpose of showing you how it looks, because there's things that I want to point out to you once the trade is in that's going to be important for you to remember. So here we go. Pay attention. We're going to click on the last price, right? And by the way, if I didn't want to buy it at the last price, if I was smart and I said, you know what? It looks like to me, every time we come and test either the 5-day, which is the yellow line, or the 13-day, it looks like we get rejected. So I could go ahead and enter in a price right up here at this level and say, you know what? I'm going to bet that we test this level here and then we get rejected lower. And if I were to do that, I would say, what is this level? Well, it looks like this level is around 34,890. I would enter in that price here, 34,890. And let's say I wanted to go short 2 Bitcoin, meaning I'm going to bet 2 Bitcoin worth that the price is going to continue lower after hitting this level. I would then choose how, and you can see how much exposure it's going to give me, about $69,000 worth. I would then choose my leverage. If I left it on 10 times leverage, it would cost me $7,000. Because again, remember, I'm getting 10 times that amount of money, and this is about $70,000. But let's say I wanted to be riskier and I didn't want to wager that much money, but I wanted exposure to the 2 Bitcoin still. Well, now, if I were to go ahead and do 25 times leverage, I can then go ahead and only have to spend $2,800. But because I'm using 25 times leverage, it's giving me access to 2 Bitcoin. So let's go ahead and hit sell short. Now, remember, if I was advising you, I would set my take profit and stop losses. But for this, let's just go ahead and enter sell short. It's going to ask you for your TradingView password. You hit confirm. And now take a look. If you zoom in on this chart, what do we see happening here? You could see this red dotted line here now. This is my sell order. And if I go down here, I can actually see my open orders. So you could see if I click on it, well, it's showing me I'm going -2 Bitcoin. So I'm trying to sell 2 Bitcoin short, and I'm going to do it at this price, at 34,890. But guess what? So far, it hasn't been filled. We haven't hit that level yet. But we're hoping that this is going to continue up. It's going to hit this level. We may be at a loss for a little bit, but we're going to try to bet that this thing is going to continue to go down. Now, once this goes and fills, then it's going to come into my positions here, and you'll see it show up. And then I'm going to have some additional options of things I can do. I can set a limit order. I can actually see what is my profit. Now, it doesn't look like that order is going to get filled right now. It looked like we had the right idea, and you could see it's really starting to sell off here on the price of Bitcoin. However, our order is up here. So right now we're not getting filled. So what can we do here if we really want to jump in and take advantage of this? Well, we could adjust our order. So we can come in here and we could say, you know what, let's cancel this order because we're not going to get filled, at least in the amount of time that we want to. And then let's go ahead and do it again. Let's do the same thing. We want to go short 2 Bitcoin. And I'm just going to jump in this so you guys can see what it looks like. But I would probably be more patient here normally and wait. But let's just do it at the last price. And let's go ahead and sell short. And it looks like, here we go. It looks like we're getting, oh, it looks like we were just filled. Okay, so now, sometimes you have to hit refresh on this page. And if we do this, you could see immediately, what does it show? It shows that I have a position, -2 Bitcoin here, and it shows me a liquidation price. So this is the most important thing that I wanted to show you. Remember, we're using 25 times leverage. So what does that mean? That means that we don't borrow this money for free, number one, but number two, there's a certain level that they'll let me borrow this to before they liquidate my entire position. So what do you see? If you scroll up on the chart, you will also see that my liquidation price is 35,903. So where is that? Well, it's a pretty far ways up. It's actually right around here. So if the price of Bitcoin went all the way up to this point, I would be liquidated and I would lose all of the money that I went and wagered. Now, where's my take profit? Well, I haven't entered in a take profit yet. But just looking at this chart, where do I think I'd be comfortable with taking a profit if we were to continue this downtrend? Well, if you take a look, where does it look like we've seen some rebounding? Now, all the moving averages are kind of out of play. The moving averages are all above where the current price is. So I have to look for other indicators out there. Is there any Fibonacci levels that I've drawn? Is there any previous areas of interest, any previous lows? Well, it looks like we rebounded here. This could certainly be a level. It looks like we saw the body of this candle close here, and then we saw a rebound from here. Maybe we'll say, okay, you know what? We're not even going to wait for it to get that low, but we're going to say 34,380 is the level that we'd be happy. If you come here, you'll see where it says take profit and stop loss. So again, what was that level? 34,380. Click on this. Take profit, 34,380. And whoops, you want to be careful with fat thumbs. And then it says that we'll make a $624 profit if it indeed touched that. You can also set a stop loss. So let's go ahead and enter that one in there. So now you'll see that if I refresh this page, sometimes you do have to refresh the page, team, because it will not automatically update sometimes. And now you could see it will show me where my take profit zone is. So this green line here, this is where I'm going to be taking profit. But what about a stop loss? What about the level where, hey, you know what? What if this thing goes in the opposite direction than we were planning on? We want to set a stop loss, but you also want to maybe give it a chance. Maybe you want to give it some leeway to move a little bit higher because these things are volatile. You can see oftentimes fake outs. What did we see here? We saw this move lower and then this spiked high and then move lower again. So where is that level? Well, it's really based on your risk tolerance. Sometimes you may get it to go in the right direction you want right away. But if you have some conviction that it's going to go there, sometimes you may have to sit through this thing spiking higher before going lower. Or sometimes you could be wrong. So you want to give it some room if you're comfortable with that. But you want to have some level where you're going to do a stop loss because you want to be protected. So where is that level going to be for me? Let's say it's up here at, let's say, $35,000 or so, because I want to give this a chance. So I can enter 35,000 in my stop loss. And if I did that, my loss would be $616. So based on my take profit, if this trade goes the right way for me, I'm going to make $624. If it goes the wrong way, the most that I'm risking is $616. And I entered that in there. Now, where are we currently? Currently, if you look at the unrealized profit and loss, we're sitting at a little bit of a profit, a $4 profit, right? And this is moving quickly here, up and down. And then you can see the realized profit and loss is about $10, which was like my fee to get in this. But in about 5 minutes, and by the way, why do we have this realized profit loss? Remember back to the first lesson we taught you here. The funding fee was negative. So what happens when the funding fee is negative? They want to try to make people go long. And by the way, look, now we're up almost $100 on this trade. So as this moves lower, because we're short, we're making money. If this goes the other way, we're losing money. But because there's more people right now going short than going long, the funding fee is negative, which means that I actually have to pay the longs to go short. If this was positive, I would actually be receiving money. But remember, I told you that this was not a very high funding rate. This was kind of a small funding rate, right? So it's 0.009. So for my trade, which cost me a few $1,000s, it was only about a $10 fee. But in about 4 minutes and 20 seconds, this is going to reset. And if you highlight your mouse over it, it actually shows you what the predicted funding rate is. And this will show you that it's 0.00012. So it's actually a little bit higher. It's a little bit lower. It's actually going more towards parity. And the fee is not going to be very significant. Now, take a look. The price of this is going in the wrong direction from us. We're actually down $100 and almost $50 on this trade. Now, this is something that I'm comfortable sitting through, but for some of you, this may be something that maybe we have too much exposure. Maybe we have too much risk. Now, remember, I went short 2 Bitcoin worth. So this cost me several $1,000s. But one thing to keep in mind is that every time you see a $100 move in this, well, it's going to affect me to the tune of either plus or minus $200 because we have exposure to 2 Bitcoin. Maybe you want to try this out and you only want to do, 0.1 Bitcoin and you don't want to, use a lot of leverage. Well, the movements are going to be much more muted. It's not going to be seeing these volatile moves up and down where, okay, I was just up $100. Now I'm down $100. And this all happened within 2 minutes. So this is something that in a more advanced strategy would be, hey, what if we still have a lot of conviction that the price of this is going to move lower eventually towards our point? Well, you can see that right now it's going a little bit in the wrong direction. We entered here and it's kind of bouncing around a little bit higher. What can we do? Well, you can just leave the position alone, or you can try to you could try to heighten or increase your cost basis, which means that if I wanted to, I can add additional positions as the price is moving higher. So an example would be, I could say, you know what, if it comes up here, I still think that it's going to move lower, but it may come back up and retest this area. I can enter in additional orders and it will increase my cost basis, but it will give me more exposure at the same time. So this is something that, you have to weigh out what you want to do and how much conviction you have. But this is something that you can either lower or higher if you're going long or short your cost basis and get more exposure. Many people, some of the strategies that they actually do is that they will not try to catch the absolute bottom or catch the absolute top. They will actually layer in small short positions or small long positions. So if I wanted to bet that this thing was going to go higher, I would go long, right? But you don't know exactly where the bottom's going to be. So there's a lot of traders out there. Some of the strategies they do is they would say, okay, I'm actually going to enter in a small long position here. And then if it continues down, I'm going to enter in another small long position. And then if it goes down to this level, I'm going to actually enter in a position with a little bit more leverage, and it's going to increase the exposure I have and really reduce my cost basis all the way down to here. But if you do it like this and you layer them in, it ensures that, hey, listen, I'm not going to catch the bottom, but I want to try to enter into positions on the way down. I actually want to be buying long positions on the way down or getting into short positions on the way up. And then once you think you've gotten to that peak, you can then go ahead and increase your leverage and then either raise or lower your cost basis. So these are some strategies out there. Now, we're looking at an hour chart of Bitcoin here. But when I'm doing these leverage trades, I actually like to go much more granular to see what's happening even more in real time. So if we went to a 15-minute chart, what do we see happen? Well, you can see we had this big red candle, and it looks like we were trying to go ahead and rebound. And where did we hit? We hit exactly on this 5-day moving average, and it looks like it's being pushed a little bit lower, but we're still at a loss here. We're down $164 because it's above my position. What's happening at an even shorter time frame? Well, let's go ahead and say a 5-minute time frame. What do you see happening? Well, it looks like a lot of chop here, right? It looks like we're seeing, the price kind of go up, down, up, down, up, down. We got to watch this to see, hey, are we going to see a little bit of a breakout to the upside? Now you could see on our position, we're down $200. So when you're doing these kinds of positions, it certainly can be a little bit nail biting, but if it's too nail biting for you, you're probably using too much money. But you also have to have some patience. Now, what else can we look at? We can look at the momentum indicators, right? So it looks like we are seeing some chop here, and it looks like we're in a downtrend. It looks like we're getting rejected from some of these smaller time moving averages, but we want to be careful since we're short that we're also not forming like a base here, a reversal point here. You see a couple spikes down to the lows here, and we're not seeing continued downside. Now, look, you can see this here. You can see how price is starting to move higher here. So let's go ahead to a little bit of a longer time frame and see, okay, it looks like, again, we're down $200 here, right? So we want to watch this. If we get above this level here, well, are we going to continue to see follow through the upside? Or are we, like we saw here, going to hit this level and get rejected to the downside? Well, when we look on the 15-minute chart, one of the things I like to look at is the momentum indicators. So you can use several of these. You can use the stochastics chart. You can use the MACD. You can use the RSI. If you want to learn about all these things, I recommend you go to the Learning Center in CryptoCharged because we cover all of these different indicators for you and really show you how to use them and exploit them. But what we're seeing here is we are seeing a little bit of a bounce out of oversold conditions, but it looks like it's starting to slope back down here. So let's see if we're going to see a continued follow through. Well, guess what? Maybe we need to either change direction on our trade or maybe we need to get out. Now, remember, I do have a stop loss in where I was comfortable with losing $600 on this trade. Remember, I told you that this wasn't a level that I would normally enter into, but it was something I wanted to jump into a trade just to show you how all these things work live and in real time. But the important part is that we have our take profit and our stop loss in. So I'm never going to lose more than I was comfortable with. But you can see, hey, we're down $300 here. Not exactly ideal. But what happened? Well, we just hit this level. Now, a lot of times these trades, they take patience. I was just doing this the other day with Gavin, and I was actually getting exposure to like 13 Bitcoin. So every small $100 move was resulting in a $1,300 move either to the upside or the downside. And what happened? Well, at one point, I was down a pretty significant amount of money. But then we ended up ending the trade positive. And it really was because of patience. And it was because of the fact that I had conviction that I thought we were eventually going to see what we thought play out. But this is something that I would recommend as just a rule of thumb. If you're going to be using leverage and you're going to be using a decent amount, you do not want to step away, let's say, from the computer. I wouldn't recommend you going and placing a leverage trade while you're at work, and all of a sudden the phone rings and you're tied up for an hour and you have a lot of money on the line. And by the way, look, it's doing what we thought it might do so far. We hit this level and it's getting rejected again. Let's see if we can break beneath some of these lows here. But I know of people, some horror stories where maybe they entered into a long position and then they fell asleep. Well, what do we know that can happen after normal hours overnight in the Asian markets? A lot of times you can see price go down. And I've learned this from experience over time as well. If you leave a trade overnight when you go to sleep, you can wake up to either feeling really great or feeling like you want to throw up because you fell asleep with the trade open and you ended up getting liquidated. So I would never fall asleep with the trade open, and I would make sure I have the proper amount of time and attention to dedicate to these things. Now, yes, you can limit your loss, or you can make sure you take profit with the use of the take profit and stop loss. And remember, again, because this is important, once you place the trade, you can either initially set the take profit and stop loss, or once you hit the trade and it fills, you can do the take profit and stop loss right here. But even if you have that set up for yourself, it's not something that I would want to just go ahead and not pay attention to, because maybe we're seeing something to develop and I don't want to wait till I lose $600. I want to maybe cut my loss. Or one of the best sayings that I actually heard is that, good traders, they cut their losses. Okay. Great traders, they change direction. And one of the things that I think is important to note when you're looking at using leverage, you are not just betting the price is going to go up. You can bet the price is going to go up, or you can bet the price is going to go down. So what does that mean? That means that we are not married to the price of it going up. In fact, when we look at people that do trades like this is something called scalping, essentially. What it means is that you're using leverage and you're trying to take advantage of some quick, short, volatile moves in a short period of time. Because of that, you don't care if the price is going up or the price is going down. All you care about is which direction, and have we identified which direction it's going in, and can we take advantage of it? So you want to remove emotion completely from it, and you don't necessarily have any bias. Now, yes, in your main account, you own all those coins and you want to see them go up. But you want to kind of remove that from the equation here if we are trying to bet on it either going up or down in a short time frame. And what you want to do is just say, okay, I don't care if this thing's going up or if this thing's going down. All I care about is, am I getting the right direction? Am I identifying the correct direction? Now, obviously, because we wanted to jump into this trade here to show you some of these things, it appears that we didn't identify the correct direction here, at least in the short term, if we break above this level. Now, how can I get out of this trade? Well, I have my stop loss that's in, but also another thing that I can do is I can just quickly do a limit order and I can set the price. Or if I have to, I can do a market order, which is going to just go ahead and execute my trade and get me out of this position instantaneously. Here's the problem with doing a market order. If we do the market order, it's going to give me like the worst execution, meaning it tries to give you the best execution based on the orders in the order book. But oftentimes it's not something that you're going to get the best price, because it's not like you're getting a guaranteed price with the limit order. There can be something called slippage, where maybe it shows you that the price on KuCoin is 34,916, but maybe that's only for the closest price, right? Meaning maybe there's only like 0.1 Bitcoin available at that price. And if I'm trying to fill 2 Bitcoin worth, I actually am going to get this order, this order, this order, this order. And you actually have to go up the order book in order to do this. And you can certainly lose you could certainly not get the profit or get the loss that you were expecting. So another thing that I can do is if I see this happening and I say, you know what, I want to give it a little bit more chance, I can go ahead and I can cancel my stop loss and I can remove that. And now it's not automatically going to sell it if we hit my level. Maybe we want to give you a little bit more patient and see if it bounces off of this 13-day moving average. And in fact, if I was really feeling risky and still thought that we were in a downward trend, I could go ahead and layer in another order here and then increase my cost basis and have a little bit more exposure and then play that more to the downside. You also can come down here and I can click auto deposit margin. So this is an important one to note. Number one, if you are not setting your stop losses, or if you're giving it a wide range and you're maybe want to continue to see if it's going to reverse or change direction or go in the way that you wanted, you have additional money if you have this in your account. So you'll see I have an additional $21,000 in my account. Well, my liquidation price is $35,900. So if it goes to $35,900, what's going to happen? I'm going to lose the money that I put out there. I'm going to lose the $3,500 that I wagered. However, I can have it auto deposit margin so that liquidation price gets pushed higher. So essentially I can add more money to the trade without having to, let's say, buy more Bitcoin or sell more Bitcoin, but it will give me more room until I get liquidated. So let me just show you what that looks like. You'll see here my margin leverage. I have $2,300 of margin here on this trade. If I click on this, let's say I wanted to, out of my $21,000 balance, let's say I wanted to add another $500 of margin. Okay, if I did that, you'll notice that my liquidation price went from $35,900 to $36,152. So essentially what I did is I gave myself a little bit more room in case price goes the other way against me. Now, I don't recommend that you do this if you're sitting in a losing trade and maybe you want to cut your losses. But if you still have a lot of conviction that, hey, you know what, we're going to still see this move to the downside play out eventually. However, I don't want to get liquidated and I want to stay in this trade, that's how you would do it. You can also click on this auto deposit margin. And what this will do for you is it'll automatically take the money that you have in your account and continue to apply it towards your margin so you don't get liquidated, or at least it pushes off your liquidation as much as possible. However, if you have this checked, you better make sure that you want to do that. And you want to better make sure that you want to continue to do this, because otherwise it'll just keep taking money out of your account and automatically applying that towards margin. And if you fall asleep at the wheel, well, guess what? I could be out $20,000 if the price of this thing just kept going up, 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 up. So a lot of watching price here, it can be, a little bit boring, meaning sometimes you might not see anything happen for a while and you're literally just sitting here watching price. And sometimes it can happen really, really quick. So you just want to be prepared for this. And you want to make sure you're either having your take profit or your stop losses in there, or you're watching this thing continuously and you're making sure that you either take the profits or you don't get too hurt. So we'll go ahead and pause there, Gavin. And let's go ahead and see what questions that we have. What are the moving averages and time frames that I use? Great question, John. And hello, by the way. So listen, different technical analysts like to use different time frames. They like to use different moving averages. For me, for my short time trading on KuCoin, I like to take a look and I bounce around from like the hour to the 15-minute. And then sometimes I'll even look at like the 5-minute to see what's happening here, right? And you could see that it's rebounding here and it's potentially hitting this. And look, this might be a good area if I wanted to add in some additional shorts, unless we see a breakout above this level. But this is really up to you, right? It's up to your personal trading, and certain people's indicators, some indicators they use work for them and some indicators work better for other traders. But in my specific instance, I think the 15-minute is a pretty good one to kind of take a look at. And then what I'll do is I'll draw in exponential moving averages. So I like to draw in the 5-day, or it's really the 15-minute moving average in this case, but it's the 5-day moving average, the 13-day moving average. I like to take a look at the 20-day moving average. And then I also have the 50 and the 200-day moving averages in here. So it sounds like a lot, right? But these are all the moving averages that I like to pull up. So again, just to kind of go through them again, you have the 5-day, the 13-day, the 20-day, the 50-day, and the 200-day. And they're all the exponentials. And sometimes I'll also throw in some of the simple moving averages because those levels can be meaningful as well. Now, if you want to, this isn't exactly the call for this, but if you want to learn more about these different moving averages and these different indicators, make sure you check us out on CryptoCharged in the Learning Center, and we'll break all this stuff down for you. But those are some of the levels I like. And then what I like to do is I kind of like to look backwards and say, well, which one of these levels has been a good either ceiling of resistance or floor of support? And if we just look back here, I mean, look, what do we see? Well, we see that when we're moving lower in price here, well, it looks like this 5-day moving average is a pretty good level. It looks like we touch exactly on the 13-day moving average. It looks like we hit the 50-day here, right? And it looks like we're in a downtrend here, unless we are breaking out of this here. We have to see. But it looks like this 13-day has provided some good resistance, as well as this 20-day. Are we going to continue to see this move to the downside, or are we going and getting a bounce higher and we're going to actually invalidate this downward move and break out to the upside? Well, you want to see, and it's something that we haven't gotten a clear answer on just yet. Any other questions, Gavin? When do longs get paid by the shorts? When funding rate is negative. So when the funding rate is negative, that means that the shorts pay the longs. So that means that there's more people going short than there are people going long. And because of that, it's driving the price of the perpetual contract beneath the spot price of Bitcoin. So the mechanism that they have on the exchange to try to get this price closer to the spot price, remember, it's being driven down because more people are going short than going long. The mechanism that they have when the funding rate is negative is that if you go short, you actually have to pay the people going long. And what that does is that tries to entice more people to go long. If the funding rate is positive, that means there's more people going long than going short. And if you open up a long position, you have to go ahead and pay the shorts for opening that position. And if you're short, it's supposed to try to entice you to open the short position because you actually get paid. Now, there's something else that I want to mention to you that you brought up, and it's something called arbitrage. So what is arbitrage? Arbitrage means pretty much how can I make money in a risk-free way? And it's by exploiting different things out there, by exploiting different variations in price, essentially. So what some traders do is they literally try to make money just based on the funding fees. So what does that mean? Well, that means that if they have, let's say, a 1 Bitcoin long position, and then they can come in and they can come and they can open up a short position for 1 Bitcoin. But if the funding fee is actually positive, well, they're safe as far as any risk with the price of Bitcoin going up or down, because they have 1 Bitcoin in the spot market and they have 1 Bitcoin short in the futures market. But if the funding fee is, let's say, significantly positive, they're getting paid to hold that short position. So this is something that you can actually make like an arbitrage, where you don't really care necessarily if the price of Bitcoin is going up or down because you're hedged, but you can make money on that fee because of the funding rate, and that can be something that you can exploit. So those are just some more advanced trading strategies that some individuals do. Gavin, any other questions here? When you say the longs get paid for you to take out the other side of the trade and vice versa, how is that figured into your cost and profits? Is that part of the unrealized gain loss? Yes, it is. So that is 100% part of the unrealized and the realized P&L. So the unrealized is what you haven't gotten charged for, what you haven't earned yet, and the realized is what you've already kind of taken that hit on, right? So because the funding fee is negative, I've already realized a $16 loss, meaning I was already charged that. But I have an unrealized loss here because this trade has gone a little bit in the wrong direction for us here in this example. So I haven't sold it yet. So it's unrealized, right? But if I were to sell it right now, it would be a realized loss. So this is something that, we're kind of being a little patient here, and we're doing this example here in real time. As I mentioned, this probably wouldn't have been a trade that I would have just jumped right into, because it was a kind of an unclear range that we were in. But, if we take a look, I mean, you can see some of the trades that we had done, and you can see oftentimes I'll go long and short in a pretty quick time period, and you can see how you can make significant sums of money in a very, very quick period of time. And it shows you in this trade you made $1,000. In this trade you made $1,000. In this trade you made 1,200. You made 900. You made 750. Right. So what I typically will do is wait for a really clear sign, one that I am in a position where I'm feeling pretty confident about this range. Now, we jumped in again here for the example, and I'm down $900, right? Which is not an ideal situation, but I'm comfortable with it based on some of the past performance over the last few days, and I really wanted to go ahead and show you guys this. But what's one thing we could do? Well, if we take a look at a bigger picture, we're clearly in a big downtrend, right? Now, we are seeing the potential for a W where you could continue to see a rebound higher in price. So if we say, you know what, maybe we caught the wrong side of this one here, we could get out of this trade. But then, remember what I said, one of the things that really good traders do, they don't get married to a position. So they say, you know what, let me cash in on my loss here, and let me just go ahead and change directions. Meaning, we thought it was going to go down, but I'm not too proud to say, hey, you know what, we got that one wrong. Maybe then you go ahead and switch positions and go long. So good traders, oftentimes, they trade direction. And again, when you're doing leverage trading like this, you don't necessarily care if it's going up or down, just if you're catching the ride in the right direction. So Gavin, any other questions that we have here? What are the indicator labels you use for 50, 100, 200? When I search for them, I see several options. Great question. So when you click on indicators here, you can go ahead and search for moving average, right? So that's going to be your simple moving averages, and you can see it's right here. Or you can type in EMA. That's your moving average exponential. When you click on that, you'll see that it will actually add it under my indicators here, and it usually defaults it to like a 9-day moving average. So then what I can do is I can hit the settings button, and I can change this. So maybe I want a 50-day moving average, and I could choose the style I want as well. I can make it any color that I want, and then I would hit OK. Now, I already have the 50-day moving average, but then you would see it pop up here on this chart. So that is something that you can do, and you can add indicators in that manner. Now, you might have a TradingView set up that you really like, right? And I actually like the way that this looks better than the integration within here. So sometimes what I'll do is I'll place my trade, and then I'll watch price like in real time in TradingView here. But one of the things you have to, again, remember is that the price levels here are not going to be exactly the same as they are for the perpetual contract. So this is something that you want to watch and see, hey, okay, it looks like we're hitting some of these levels. Let's go back now to the real chart of what we're trading and go ahead and see if we need to take any action at those levels. Are there certain candles that you look for when entering a trade? Are there any key candle structures you look for when starting out? Great question. So one of the things that I like to do is I like to look for a significant level, right? So like, okay, we're testing the 50-day moving average, and we are getting rejected. And then I also like to look for some candlestick patterns too, right? Like this is like a hammer pattern, right? Which this is where you see like a short body and this really big wick, and this occurs after an uptrend, and it's oftentimes a reversal signal. Well, sure enough, what happened, right? You saw this thing go up, 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 and then it basically shows you that, hey, it looked like we were going to break out, and then the bears essentially pushed the price lower, and it ended up closing way below the high of that candle. And then what happened? You saw a big downturn ensue. One of the other things that I like to look at are something called vector candles, which that's essentially a little bit more of an advanced term. But if you wanted to pull these things up, there's something that you can go to under indicators, and you can't do this on KuCoin, but you can do this on your TradingView, and you can search for something called Trader's Reality. And that's the overlay that I use. And if you click on Trader's Reality, what it actually does is it changes the colors of your candles. So you'll notice that instead of having just red and green candles, I actually have like a almost like a faded out red and a gray candle. And then I have these really solidly filled red candles and green candles. And there's also these like purple ones, and there's some blue ones. So essentially what it does is it tries to show you when there's a lot of coins exchanging hands with each other, meaning there's a lot of volume, but it's not necessarily just volume. It's more like activity. So it's called tick volume. And what it shows you is that there's areas where there's like a lot of liquidity. And a lot of times you'll hear people that are traders talk about, hey, a lot of times the market goes to where there's a lot of liquidity. The market makers out there want to bring price to where there's a lot of action or a lot of liquidity. So sometimes when you see some of these filled in candles, and again, it's trader's reality if you want to get this overlay, and I could do a whole, webinar just based on this. But what it'll show you is, hey, if you look to see identify patterns, and it doesn't always happen like this. Hey, this green candle, this looks like it was a stop hunt rise. It looks like you saw number one, it's a hammer, but number two, you saw a big spike up. There was a lot of volatility here, and there was a lot of exchanging of coins in this candle, which turned it this solid green candle color. What happens oftentimes, you see that, you see a reversal. So if I were actually trading with you guys when I saw this, I would have had a ton of conviction to say, okay, we had a breakthrough here. We got shot back. It's a green vector candle. I think we're going to see a reversal off this level. And then sure enough, boom, what do you see? You saw exactly that happen. You can see this to the upside as well. When you saw, you saw price go down. It was a solid filled red candle. A lot of times these candles, they get filled, which means that, okay, we saw this go lower, but then the market got driven back to where this liquidity was and this whole candle got filled. This is an advanced strategy. We could do another session for an hour and a half just on this. But to answer your question, John, some of the indicators is obviously looking at different moving averages, looking to see if you have any kind of W-like formations or any kind of M formations to showing you either a top or a bottom in the market. Some certain types of candle formations, whether it's a hammer or a doji. And a lot of times it's just looking to see, hey, is there a level that we've hit several times off of and it looks like it's respecting that floor of support or that ceiling of resistance? So it's something that I think you'll get a hang for as you look at price more. Once you start looking at price, at first it might be looking like you're looking at the matrix, right? But once you start to look at it and you become the one, no, but you really, it will start to, I think, make a lot of sense to you. As the more you watch it, you can identify patterns more easily. And then it's almost like, there's so many times when I look at it and I'm just like, oh, it looks like that price is going to go down. And then sure enough, it does. So these things will become kind of second nature to you once you do this enough. But typically I like to have different support and resistance levels with my moving averages. I'll try to identify areas in the chart. I'll look for some different kinds of patterns. I also like to pull up some momentum indicators, right? So if I wanted to pull up the stochastic chart, I can do so and it'll pop it in there. And you can see I actually already have the stochastics here. I have the RSI here. I also have the MACD here. And what am I seeing here from this? Well, it looks like if we were to continue to see some move to the upside, we might have a positive stochastic crossover where you could see something like a W formation play out like this, where, okay, we came down, we set this low, we moved higher, we were rejected, and maybe we don't move as low, and then we see some follow through to the upside. This move would be confirmed if we broke above the 50-day moving average, were able to close above it, back tested it as support, and then continued to the upside. This would be coupled with the fact that we would see the stochastics cross over from oversold territory and come out of the zone. One of the things that I always recommend that you do is you don't just go based off one indicator. You always want to look for a confluence of factors. Why? Because that's going to give you the best chances of success that you can have. So, guys, it looks like we're about an hour and a half in here, and I'll keep you updated on this trade here, but it looks like it's one that we're going to have to be a little bit patient, right? But it doesn't look like I'm seeing any kind of clear breakthrough yet. We might get rejected and continue lower, or we might move higher. But I hope that this was a really helpful introduction to leverage class. Remember, you want to trade small to miss small, right? And also, you want to make sure that you're fully understanding the platform. Remember, you have that funding fee and the settlement time that are extremely important. Remember that just from a very basic level, when you're actually going ahead and funding this account, you want to make sure you're doing it in the right way. You want to make sure you're sending it to the right coin address on KuCoin, and then you want to be selling it into USDT. You do not want to be margining this here with cryptocurrencies, because then you're adding risk on top of what's already risky. And then when you're placing the trades, start out using a very small amount of leverage, because the higher leverage you use, the less margin for error there is, quite literally, where your margin will get eaten away faster and you will not have as much room for a mistake or for price to go against you. Make sure you're also setting your take profit and stop losses so you can really limit your risk. Only risk what you're willing to. Sometimes you're going to be right, sometimes you're going to be wrong. Remember, Bitcoin is extremely volatile, and other cryptocurrencies are extremely volatile. But set your profit and stop loss levels so you can really mitigate that. Don't fall asleep on a trade. Don't enter a trade unless you can dedicate the time to it. And remember, there's also ways that you can use this to almost trade in a more safe manner, where you have positions of a certain coin on Coinbase Pro and you want to hedge your position to the downside. You can open up a short position that is almost equal to, or at least a part equal to, your long position, and you can profit on the way down. Now remember, if the coin goes the other way on you, well, guess what? You're going to lose money on the short position and you're going to gain money on your long position. So that will mitigate that. However, you're not going to be making money overall. It's just going to be kind of breaking you even. And remember, you want to watch the funding rates, because these can get quite high or quite low. And sometimes if the funding rate is extremely positive, there's been times where we've seen the funding rate at like 0.25 here, where it's costing you like 25% of your trade in a fee, which can be extremely painful, especially if it's going the wrong way from you, or especially if you're doing it close to where the funding settlement is. Now, notice how this funding settlement, it says 0 here, right? So if I refresh the page, I should have gotten charged a little bit more of a fee here. Actually, it looks like it happened about a half hour ago. But this is why you also want to make sure that you are refreshing this page sometimes, because sometimes all this does not load up automatically for you. So any last questions here before we end this here, team? But again, I hope that this was helpful for you and helps you to kind of get started with your leverage journey. But make sure you're trading in a safe manner. How are you changing the view of the chart so you see more or less of the screen? G Trader, great question. So what I'm doing is I am clicking on the price on the right, and I can stretch it or shorten it, right? So I can, and then I could also just click on this and drag. And if I just use my scroll wheel, I can also just kind of zoom in or zoom out like this. So you kind of get used to this, but I can zoom into like a bigger picture of this, and I can use my scroll wheel, or I can, kind of zoom in, and then I can also just drag this around wherever I'd like. What does XBT USDT M15 indicate versus XBT USDT M60? Let's see where you're actually even seeing that on here. So when I click on this here, you can actually see it shows you the KXBT USDT, right? So that's kind of just like the price of this perpetual contract that it follows it with. I'm trying to see where you're seeing the other indicator that you were mentioning there. Michael, if you wouldn't mind, just tell me what area of the screen that you're noticing that at there, and I can kind of break down what it means. But I'm not even seeing that on here currently. But any other questions while Michael brings that up? Stoichberg, thank you very much. And Michael, if you have any additional questions on any of the content, just shoot us an email. It's dan@cryptocharged.com, and we can go ahead and do that, and we can go ahead and answer that for you. Oh, the background of the chart? That's just what they call the perpetual contract here. And as far as the 15 or 60, it might be referencing what time frame that I'm in as far as the perpetual contract. Well, guys, thank you, guys. I hope that this was helpful for you into starting your leverage journey. And if you are not a member of CryptoCharged, the website is cryptocharged.com, and it's something that you can sign up for a 2-week free membership if you'd like, to see if it's something that can help you. We are doing a special for new members where you get 50% off for literally the cost of a trade. For $49 a month. You can get access to this kind of content every day: hot coin projects, technical analysis, on-chain analysis, an entire comprehensive learning center. Just use the code MBS when you sign up, either signing up immediately or signing up for the 2-week trial. But thank you guys for your valuable time. And for those of you football fans out there, I know I'm excited to go ahead and tune into some of the games this afternoon and this evening. So thank you, guys.